Welcome to Money on Tap, your personal finance headquarters. Money on Tap is where we bring out the professionals, experience, and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this radio show. We look at all sides of the issues and bring a fully independent planning perspective to the table. My name is Seth Crustman, and I'm joined here once again with John Ryder and Ben Brayshaw. Good morning, guys.
Good morning, Seth and John.
Good morning, guys, and Ben.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. You can also find us at Facebook, 3D Investing, or Twitter, folks. My favorite. Get on Twitter. Follow us at BFG_LLC. Stands for Brayshaw Financial Group. So, you know what? We do have an interesting show today. But before we really kind of get into the show, you know, we were kind of already having fun here behind the scenes. Going to have some fun with Erik Morton. Welcome, folks. Erik Morton from Vancouver, or the Couve, Washington. How are you?
I'm doing well. Happy to be here. Thanks for the invite.
Fantastic. So a little bit about Erik. Erik is right across the river from Portland, Oregon. And so that's where the two of us are over here on the West Coast, bringing Brayshaw Financial Group to you guys. And Erik is joining Brayshaw Financial Group as our insurance division, heading up the insurance division over here. So it's really exciting because we talk about, you know, three-dimensional investing. And, you know, the first thing we talk about in that piece of three-dimensional investing is insurance. And we do quite a bit in the insurance world and life insurance. But property insurance and being insured properly is one of those things that we've always really wanted to get to the table with. And so, Erik, we're so glad to have you here with us today and able to share more of your story and more about, you know, what that looks like with Brayshaw Financial Group.
Thanks again. Very happy to be here. Important topic, a very fun topic to discuss. I enjoy it myself.
Well, you guys, without further ado, we will head into Money in the News. That's our traditional pause where somebody else grabs the mic.
All right. So today, Seth, I think a pretty interesting article, and I think this is kind of timely now. This may be dated depending upon when you're listening to it, but we just had a very, very large Mega Millions and Powerball jackpot. Now, just for full and fair disclosure, all four of us on the podcast here with Brayshaw Financial Group, none of us are big lottery proponents, meaning I don't know if I've ever bought a lottery ticket, even when it gets to these crazy numbers. But just for full and fair disclosure, if there was to be a Powerball winner, it would not be me. And probably not Ben, probably not Seth, probably not Erik. But anyway, the article really centers around the tax bomb that occurs when someone wins a 1.6 Mega Million jackpot. Now, I don't really necessarily feel bad for someone that wins that 1.6 billion Mega Millions jackpot because...
Oh, that's $1 billion, not million. I was like, yeah, 1.6 million. That's
nothing for me. That's nothing for me. Yeah,
that would be what I would win.
But it is amazing who really benefits from this. Obviously, it's the person that wins. But secondly, the IRS. Boy, do they walk away with a lot of money when it comes to this. Which I guess we're supposed to all feel good about that, right? Because the IRS is getting more and taking care of different things.
You know, John, I'm not a gambler. Per se.
You know when to hold them, you know when to fold them, you know when to walk away, you know when to run.
Yeah, that would be me.
Yeah.
That would be me.
Yeah.
That song was written about me. And but I do remember when I was in college, I had visited my brother in Massachusetts, and he had bought a lottery ticket, and we had split it. I think it was $5 each.
Okay,
and he bought a few of them.
Yeah,
and we spent.
That's when $5 was $5.
That's when $5 was $5, right? You know, and I was in college, so it was even a bigger $5.
Yeah.
So, but I remember having a conversation with him for 2 or 3 hours, like forecasting and dreaming about all the things we would do tomorrow if we had the winning number, right? Like, he quit his job. We would instantly go to the car dealership. You'd have all those. We had, and it was a lot. It was actually one of the best conversations that we ever had. I mean,
that's sad, Ben. It's sad.
It was really a lot of fun. But anyways, that's my lottery experience.
Bringing families together. There's nothing better than some lottery money.
So I figured, if I were to go to a movies,
together.
I would have spent more than that for a 3-hour movie. So
yeah, you would have had a lot of friends and a lot of family having those conversations with you if you had won, because everybody comes out of the woodwork just making sure that they get their.
But you guys, when it comes to this time of year, is weird to me when I see these lines of people. Okay, obviously when you get over, multi-millions and you get into the $1 billion, you see people lining up. So, watching the news, you'll see just at a typical convenience store, you'll see 100 people deep in a line, which I don't get it. You see people in line, they're all jumping around, dancing crazy because they think that they may win the lottery. And it's interesting when you look at actually your chances of winning the lottery.
They're pretty good.
Well, okay, so your chance of winning is 1 in 292 million. Now, your chance of winning both lotteries, because we're talking about one for 1.6 and the other for, only 690 million, something like that. But your chance for winning both of those lotteries is 1 in 88 quadrillion. That's 88 followed by 15 zeros. So some major odds there. Okay, so this latest Mega Millions. Let's cut. Seth, what the heck do you want to say to all of us?
I am trying to get Erik involved. He has been trying to get involved.
We'll get him in. We'll get him in.
Talking over him, and we'll give him the chance to say something.
The only thing I wanted to jump in on was I thought it was surprising, Ben, that in your discussion with your brother about what you would do with that money is that it wasn't that you were going to instantly give me $1 million. And it's a little frustrating. I thought we were closer than that.
That was item number 2. That was item number 2. I needed a car to go drive and see you.
That's okay. Yeah. Okay. Now we're getting somewhere.
What kind of car?
Yeah. My typical thing is I'm stopping at the convenience store and I'm like, oh, hey, yeah, there's a good amount in that lottery thing going on. I'll buy a ticket, and then I'll forget about it. 6 months later, I'll pull it out of my wallet or my glove box. Like, what's this? And well, there hasn't been a rainy day for that one yet, so it hasn't happened. But you'll be the first to know, Erik. $1 million, top of my list, right there for you, bud.
John, I did hear that the odds were better because it was larger, and that it was turning into. The return on this was worth spending the money, but I don't have anything to reference to that point. But
I always think it's less, just because I think about, hey, the more people, the less chances, but maybe the better return on the money. Maybe if you actually do cash in.
Interesting. Or maybe it's because it's accumulated so much, so they've had so many drawings that the more that the drawings go by, you the narrower that window becomes in the probability zone, so you're able to go ahead and the probability funnel, right? That's what I call it.
We need to add an actuary to this
discussion.
Quick, tell me that.
Watch out for the insurance guy
now.
Do the odds.
Okay, so one of the things that I often hear people talking about, and I have a client of mine who's kind of funny. He talks about, well, John, if I were to win the lottery, here's how I would take it. And he always will talk about whether he should take lump sum and whether he should take it immediately or whether he should spread it out over 30 years. But one of the interesting things I find is that, to me, when you think about it, who knows if this lottery is kind of almost like the pension discussion that we have. Who knows if the lottery will be around in 30 years? So my thought would be, well, I would want the lump sum up front. Obviously, you're paying a big tax bite on it, but just knowing that you have it up front, I think, would be a better option than wondering if it's going to keep on continuing to come in for you in the future.
I think that's a good point, because it's state run. It's state run,
and a lot of our states are underwater. So, no
I
doubt.
think the thing that I just realized is I am missing a part of my client reviews. I'm bringing in the lottery conversation next time I sit down with the clients, and just we're going to bring that to the table and make sure that they're aware.
It kind of wraps in that whole risk aversion quite well, don't you think? To have that conversation. What exactly would you do?
Yeah.
And when? And why?
As long as you guys don't start saying, well, if you want to come to your client review, you need to bring a couple of Powerball tickets with you. Because that's probably should be part of the discussion.
Hey, next on our list here is a 17-year-old gamer explains how he made $500,000. It sounds, $500,000 kind of just slides by. So I want to put it in that context. $500,000 by playing none other than Fortnite. So all the parents out there that, like myself, that may be a little concerned about the amount of time that on the Fortnite game that's being spent, just consider it an investment. And we need to just find a way to harness our children's capacity to play Fortnite endlessly and turn that into an income for them.
Yeah, that's not on my list.
So this kid, Seth, this is interesting. This kid, he's 17 years old. His name's Nick Overton. And he received his first gaming system, an N64. So is that Nintendo 64?
Nintendo
okay.
64,
as a Christmas present at the age of 6. And then he says this, it might have been at that time his biggest regret Overton said about his dad gifting him the system. Over time, he said, his parents eventually felt he was spending too much time playing and took it away from him. At age 12, his dad sold his Xbox and accompanying games. Finally, his dad told him that he was going to continue gaming, that if he was going to continue gaming, he needed to find a way to make money on it. He says this, he says, most people are used to working a job, getting a paycheck. Simple. With live streaming on YouTube, it's much more complex. So on YouTube, I guess gamers who stream their play are partnered with a multi-channel network. They call it an MCN. And there's bundles which are created to monetize the content. So, guys, Ben, you've played some Fortnite in your day, haven't you?
I have tried it.
Yeah. And Erik, are you a Fortnite aficionado?
I am not.
I'm not either. Yeah.
My sons are. I have 3 boys, and my oldest 2. Literally, I have to stop them from reenacting the Fortnite winning dance out in public everywhere we go. I'm serious. We're in church yesterday, and Jace, my 12-year-old, just turned 12, does in the middle of praise and worship is doing a Fortnite dance. I'm just like, this is not appropriate. He said, but it is funny. And I said, well, no, I don't know that it is.
Sounds like a chip off the old block, Erik, to me. That's what it sounds like to me.
Spencer is my 13-year-old, and he's doing a lot of Fortnite dances too. And I'll just turn around and I'll be like, what are you doing? Like, some of these things looks so bizarre. I think like my version of playing Fortnite. Have you seen the Taco Bell commercial lately where it's like they've got something new thing for Taco Bell, and the guy's playing video games, and he's just going up, down, and the video game players saying back to him, wrong button. That's me like trying to play video games. It's like, wait, what's going on? I can't go this way. I can't go that way.
I think
they make it look so easy.
This whole gaming, world, this whole business that exists out there, there's like lots of different levels of business around it, right? There's obviously the gaming companies that are making a ton of money, right? And then you've got these kids out there, and there's another one my kids talk about. It's like I think his name is like he has a specific tag name. It's like Knight or Nitro or something like that, and he makes ridiculous money, and there's all these things going on. But I think understanding this world of YouTube and what's going on inside, because the more watches you have, eventually YouTube starts paying you.
Yeah, so this is like a subscriber-based thing where people will, because you're so good at this game, let's say that you're someone so good at this game, then people actually want to follow him, and they pay a subscription service. It could be $5 a month just to be able to watch and see what movies he makes. Yeah. It's unbelievable to me. I mean, it's foreign to me, but I guess that shows my age.
They're actually all they want to do is watch. My youngest doesn't even play. All he wants to do is watch someone play.
Wow.
And it's bizarre. But on the other side of this, I think to myself, they're just playing video games all day. That must be the easiest job. But they have to come up with so much new content for these kids to stay engaged, and they even understand it. My son Jace was like, yeah, Dad, there's a bunch, and this kid over here I've heard made 50,000 or whatever it is, but he just doesn't have a lot of new content. So it can go away as quickly as it comes if you're not.
So Eric, do your kids pay money for a subscription to watch it, or is it?
No, it's all about the ads. So it's the YouTube ads.
Are the real money is, yeah.
Yeah. So they get a piece of the
I thought
ads.
it was incredible that this he's getting stopped at Target, and when he's out, doing his daily routine for pictures and autographs, like he's a star.
Yeah, my kids would recognize him in a second if he was walking down the street.
Well, that's the thing. So, yeah, my son, he plays a ton of Fortnite. He's really good at it, but doesn't make any money, doesn't YouTube it. But he does. He spends a ton of time watching these people.
It's time to mow the lawn,
and I'm thinking
son.
to myself, do you remember? I remember when we had an Atari, and then we got a Nintendo when I was a kid. And I remember watching my friends play and saying, I can't wait till they're done so I can get on it. I didn't want to watch them play.
I know. It's a different thing.
I was actually one of those weird kids that never had video games.
Yeah, we didn't
and
have
my
that.
parents told me to
Doesn't
just go
surprise me.
outside.
And
I never got
explains
alone.
so much.
I never got
That
into this
explains a lot, Seth. Thank you for that insight.
Here's a stick. Here's a rock. Hey, I think we're going to take a quick break at Money on Tap. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com.
A lengthy vacation requires some thoughtful and detailed planning, and few people would go on such a trip without the necessary preparation. On our Cliff Notes edition of Money on Tap, Seth Cressman shows us with his example that the same care and thoughtfulness should also be given to our retirement planning.
This is a journey. This is a project that you have an opportunity to invest in and to uncover and identify how you want to live your life. And I think how many times, we go on vacation. A great friend of mine took his whole family on a mission trip to Guatemala this last year, and that looked like a tremendous adventure. And how much planning does it take to get that to happen? I have no problem involving myself in creating a plan around something like that. And if I can get my mindset to be thinking that way, like, wow, I am planning the largest vacation of my life. How much fun can that be? And I can't wait to sit down and talk to you about that, right?
Thanks for joining us for this Cliff Notes edition of Money on Tap, with great tips from the pros in three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. Now here's more Money on Tap with Seth, Ben, and John.
Welcome back. You're listening to Money on Tap, your personal finance headquarters. Money on Tap is where we bring out the professionals' experience and some fun in what we call three-dimensional investing. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. Also, don't forget to find us out there in the podcast world, whatever your venue is, Stitcher, Apple, iTunes. Like us, follow us, subscribe, rate us, leave us your feedback. We appreciate our followers and our subscribers out there. And it's just one more way that we get to stay in touch. And you can go ahead and listen to past episodes that we've released as many times as you like. Because, I know how many times I'm sitting there listening, and I just need to hear Ben say whatever he said one more time and just let it let it sink in. Because I need to soak
Seth.
in that.
You're not alone.
Okay, good. I felt like I was there for a second. Thanks for not hanging me out there, guys. So hey, we're gonna jump back in with Erik Morton. Insure the Couve is his handle there in Vancouver. If you're not familiar with Vancouver, Washington, it's right across the river from Portland, Oregon. If you go across the Columbia River, there you are, Vancouver, Washington. So it's almost like Portland, but it's Vancouver. And the taxes are different.
Yeah, a little less weird.
Yeah.
Vancouver,
yes.
USA.
Well,
Vancouver, USA. It's people get confused. We are not in Canada.
Yeah. Yeah.
Well,
growing up, we always called it Vantucky, but I don't think that's what they get anymore, do they?
No, there are still some spots where Vantucky is strong. I think there's some shirts, Vantucky strong. You might see those here and there, or they might just be cutoff shirts that below there's a tattoo that might say Vantucky Strong. Not sure.
So those of you just joining us here, and Ben's loving it because I keep talking over him right now. We want to give a little bit of a background. Erik has a lot of experience, and we're going to get into some of that experience and what he's bringing to the table here with Brayshaw Financial Group. He is joining Brayshaw Financial Group in the property division of Brayshaw Financial, leading that and teeing that up for us. So we're going to talk more about that. But before we do, Ben, I want to pass the mic and appreciate you for holding on there for a second, buddy.
Yeah, well, I wanted to welcome Erik. Really excited about Erik and his experience, his background. He's going to be a huge piece to helping our clients further an offering of need that's something that we haven't done before. We've always handed the property insurance side over to relationships locally or regionally and so forth, and we trust those relationships and we're happy for those relationships, but we know that there's a lot of service and need and help for people in a lot of different areas because we work with so many people with so many different needs, and Erik's background is pretty large.
Ben, I think this is an area, and guys, this is an area, the property casualty insurance area, that even all of us here as licensed insurance agents, this isn't something that we do every day. But when it comes to the property casualty, there's kind of like this black hole of different things. Now, we understood what we need to know for our licensing and all that. But I will say this. It is certainly one of those areas where there's a lot of complexity to areas. And it's one of those areas that a lot of people say, well, you know what, I don't want to mess with this. Just take care of it. And I'm sure you've heard that a few times, Erik, during the many years that you've been doing this, where people just want you to take care of it for them. So we'll chat more about that too.
And they don't know what that even means, right? I mean, what
does that mean? Yeah, just make sure I'm okay if something catastrophic happens, or if something happens to my car, something happens to my building, if there's hail, just take care of it.
Yeah, and if people say that to us walking in to solve a retirement problem, we'd be like, well, what does that mean to you? Take care of it. I mean, is it, so I mean, there's so much vagueness to all of that, but I'm really excited. I've known Erik for over 20 years. He's been a good friend and so forth, and he moved out west, and we're going to find out a little bit about Erik and kind of go through that process. So Erik, tell us a little bit about yourself, first of all. Tell us about your family.
So I have been married for 17 years to my beautiful wife, Sharon. We met at college in Lakeland, Florida, Southeastern University. It is now called. It used to be Southeastern College. And we had our first son 13 years ago, born in Lakeland, Florida. And then we followed up with 2 and 3. So we've got 3 boys and live here in the Couve. So we've actually moved here. I'll back up just a bit. We moved here just around 13 years ago. The circumstances surrounding that was I was working in a regional office for Geico in Lakeland and was promoted to a position to take care of their local sales offices in multiple states on the West Coast, based out of Vancouver.
And Erik, what states were those?
Alaska, Washington, Oregon, Idaho, Northern California, and then I helped with a little bit of Southern California recruiting and such as well. And one of the bigger things for the company at that time was Prop 103 in California caused Geico to pull out of the state as far as a local sales office is concerned many, many years ago. And I was involved in getting them recruited and back into the state.
Oh, wow.
Where they now have, I think they have right around 15 at this time and still growing strong. So,
okay. So tell us a little bit. So you went to, you said Southeastern University?
Yes.
And you graduated with business and you have your master's in business administration, if I recall correctly, right?
Yes. Yep. Have both of those. And there's this, in addition to that, there's a designation for property casualty insurance called CPCU, Chartered Property Casualty Underwriter, which is an 8-course certification that is almost like a master's of property casualty.
So when you say 8 courses, does that mean that you were very full of insurance after consuming that much knowledge?
Yes, I would say that. Yes. And the reason I started that program was
that was a horrendous joke. That was horrible.
8-course meal is a lot, though, Eric. We all will say that.
I just kind of tried to glaze right over it, but okay.
Okay.
No, it was good. It's dry. You've got to throw in some jokes here. I want to talk about the CPCU certification. Yeah. But the reason I went for it was not it wasn't my love for data. It was the fact that out of 20,000 employees at Geico, only 1% had that certification. So I thought, hey, if I get that, then that will make me promotable. And that's what prompted me to get the job and move out to the West. So
a Northeasterner from Vermont goes to college in the Southeast and then moves to the Northwest. Done a bit of traveling, my friend. So
I hit all the 3 out of 4, and I don't anticipate living in the 4th corner.
Well, after all of that, I'm just going to hold back on the next joke I was going to let fly, just so you know. I'm going to save that in my jar of laughter for later.
Please do. So how long were you with Geico, Eric?
I was with Geico for 12, and then what happened there was I decided I'd like to open up my own agency, my own business, and I decided to open an agency with State Farm. So I've been a State Farm agent for 5 years.
Wow. Well, everyone pretty much knows who State Farm is. So, well, that's very interesting. And then at State Farm, you got some securities licensing too, correct?
Yes.
Yeah.
Yep.
So
6 and 63 licensing, and tried to get, their take was to try to do everything under one roof, which isn't really how that works, it turns out. So.
Right. That is hard. That's why we have a lot of people here. I mean, we've got 12 offices in 8 states, and we're growing. We're adding some more offices here, and Eric's joining us. And, that's it's hard because people have, there's just so much information, so many talents, so many focuses in this world that nobody can be a master of all of them, which is why we're all here on the show today, which is good. And I'm very excited that Eric's going to be working with us.
Absolutely.
Yeah, it's going to be good. So you were with State Farm for 5 years, and what prompted you, Eric, to kind of step out and say, "Hey, listen, I want to leave the world of working for the big corporates and go to the independent side"?
Well, I had not, in my quest for which company I wanted to become my own owner of a branch, I never tested the independent route. I didn't even really think of it, honestly, and so coming from big corporate Geico, it kind of was a natural flow to be selected with State Farm and think of that being the end of my career. But I quickly realized my appetite for helping and connecting small businesses in the community, and learning, what their needs were. I quickly realized that it was there's just not enough. There's not enough that we could do all at once. So the service aspect of that was just not as good. And so for years, I just, had to kind of piecemeal things together to get that full service for that business client and friend of mine, and realizing quickly that maybe the independent route made more sense. I decided to go that route.
I think that's probably a common theme for all of us and everyone that works with us on the independent side is that trying to fulfill needs that you find that are just voids in our industry that you can't quite do working in a big corporate. There always seems to be a wall or a block or something that prevents you from really providing what someone needs and helping them. So that's, that seems to be a common piece. So, I'm excited to have Erik here for a couple different reasons. One is that we have a lot of clients who do have, that home and auto need, but there's a lot of business owners that we have that we work with that really need some kind of better service, more oversight, more clarity on both refining costs and fulfilling that, and knowing that, hey, their financial planning and their insurance needs are all coupled together in a very comprehensive manner. And I'm kind of excited about how we're going to be able to fulfill that without trying to, one of us trying to fit that void where we're just not qualified for that. And so that's welcome aboard, Erik. I'm really excited.
So one of the things I think some people may not even with us today, maybe not even really understand kind of like what is a captive agent, what is an independent agent. We talk about being independent financial planners and bringing that perspective to the table versus kind of the captive side of the industry and the restrictions that can come alongside of really being in that vein of the business. So you found yourself in a situation where really my understanding, Erik, was that the captive agency really wasn't offering the services or the products or the things that were critical for that small business owner to be successful in their coverage. And so could you explain a little bit more about that, kind of the two sides that you've experienced now and are seeing the difference between?
Definitely. And really the biggest thing was they wanted to play on the financial services side. And so because we were securities licensed as well, my strategy going in from day one was to get with business owners, help them with their needs within the business, also get into that sweet spot of when a company is just about to start offering benefits, group plans, and those types of things. And then that would filter into the needs of on the personal line side, the home, auto, and then talking to the employees about their financial planning. So you can kind of see how that would trickle down to more business and kind of solidify that relationship. It's all about relationships. So when State Farm had to pull back and pull out of the way they were handling that with the DOL law that was passed, that was probably 2 years ago now, 2.5 years ago. And that put a delay on, or not a delay, but a stop to everything that we were trying to do. So it just caused a lot of issues, a lot of, relationships I had built. I had to try to figure out how to get things done for them outside of State Farm. So that kind of was the reason for thinking about the independent side as well. But I think that answers what you were going with, right?
Yeah, just to add some clarity, and Erik's referencing the Department of Labor law, the fiduciary questions, the best interest contracts. There's a lot of the Department of Labor had stepped in and made some laws that changed a lot in the financial industry that, basically forced companies like State Farm and other ones to stop doing certain types of work because they just didn't want the potential liability that was associated with it. And they felt like it wasn't a profitable enough, big enough margin to take on based on the liability. So that was a big change in our industry that has actually been reversed. And now the SEC is stepping in, and they're going to create something that is more conducive, it sounds like, to the fiduciary standards and so forth. So,
yeah.
We're going to take a quick break here at Money on Tap, and we'll be right back with Erik Morton heading up the Brayshaw Financial Group property division, insurance division over here in Vancouver, Washington. And looking forward to more conversation around that. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. Also, don't forget to go out to your podcast venue, however you get your podcasts, subscribe, rate, like. We appreciate all of those. Thanks a lot.
Hi, my name is Ben Brayshaw, one of the co-hosts of Money on Tap. If you have questions when it comes to your retirement and are looking for a personalized solution, contact us at Brayshaw Financial Group. In today's volatile stock market, we can help you plan to find your successful retirement solution. Am I saving enough? Am I saving into the right places? Do my investments match my appetite for risk? Do I have a tax strategy that is going to help me keep more of what I earn? How can I maximize my Social Security income? If you are like most people, you are getting closer and closer to your retirement and may be wondering if you're taking the right steps. If you're in retirement, you may be wondering, am I maximizing my income while preserving my estate and caring for my family? We talk about all things financial in what we call three-dimensional investing, putting a plan around your financial future. If you feel that now is the time to start getting the answers to some of these questions for your own situation, give us a call at Brayshaw Financial Group at 855-226-8551. Headquartered in Bedford, New Hampshire, we have offices throughout New England and across the country. We would love the opportunity to show you how we can help. There's absolutely no cost or obligation just to meet with us, and we welcome you to our office. Call us at 855-226-8551.
Now back to Money on Tap with Ben Brayshaw, John Ryder, and Seth Cressman.
Welcome back. You're listening to Money on Tap, your personal finance headquarters. Money on Tap's where we bring out the professionals, experience, and some fun in what we call three-dimensional investing. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And you know what? While you're out there and you find us in this podcast venue on your iTunes, your Stitcher, your SoundCloud, whatever you're using out there, we're there for you. And you can like us, you can subscribe to us, all of those things. We appreciate. We love giving you some feedback when we hear from you as well. So occasionally we have some of our subscribers that float us over some things that they'd like us to talk about and discuss. And we like to bring that to the table too, because you know what? It's all about you and getting perspective around where you're at and how to take that next step. So important to us at Brayshaw Financial
Seth, I was going to add one thing, too. We have really enjoyed meeting with a lot of our listeners. Okay, you finish up. Now, I was just going to say...
I had another 5 minutes left in me, but thanks.
Hey, so we're enjoying meeting with a lot of our listeners. We're getting a lot of phone calls where people are saying, hey, I heard you talking on Saturday morning about this, or I heard you talking about this. And it has really been a lot of fun for us to actually to meet with a lot of you folks, and just a lot of great questions that people have. And I think really what's really rewarding for us is to be able to have someone come in that listened to our show, and they came in with a lot of questions. They had really weren't really clear about the path that they were going on, but after we went through their different investments and talked about their insurance and all that, really a lot of clarity came to the table where people have a much better understanding of what they're doing going forward. And that's really where we find a lot of fulfillment in what we do every single day. So if you're out there and you're thinking, you know what, I really need to talk to John, to Ben, to Seth, to Eric about my retirement, or just to Ben, then feel free. Give us a call, and we'd love nothing more than to be able to sit down with you and share with you about how we're able to help.
I have. There's been a number of people that have come in recently that are just really just quality people. It's kind of nice to actually, people who, and I think that's what our biggest focus on this show is really to educate. Whether you contact us or not, I mean, get as much as you can out of this that you do well for yourself. You accomplish your goals and so forth. And I think that's one of our reasons for, in trying to involve Erik. And I don't know if he's going to be able to join us too often, but as often as he can. And we're excited about that because there's a whole nother perspective of, here's another guy who's working with people in a whole nother set of concerns, a number of issues that people are worried about that we talk about more on a general scale, and he's dealing with on the intimate side. And I think that's going to really help, broaden the show perspective a little bit too. So anyways.
Yeah, and I just wanted to jump in. I had someone reach out to me after your long-term care podcast, and she comes from the financial world and didn't even know about some of those options. And so it's awesome, what you guys are doing, and glad to be a part of it because now she's, more informed, and that'll spread through all the folks that she's helping with through the mortgage industry. So.
Very cool. We've got, in case you missed who that was Erik Morton joining us from Vancouver, Washington, now part of Brayshaw Financial and heading up the property division of Brayshaw Financial.
You can say Casualty if you need to.
It's so hard to not say Casualty, property and casualty. Yes.
So, Erik, what I thought I would do is just ask you a question or try to get an idea of what a typical day is like for you. You'll be meeting with people probably couple folks today that will be coming in. But when you have, for instance, a business owner that comes in, and we have a lot of business owners in our audience here, but when you have a business owner come in, what are they saying to you? I mean, obviously one business owner is going to have a concern about one thing, another business owner will have a concern about another. But what are some of the typical areas that folks are concerned about when they own a business, as far as when it comes to their property casualty needs? What are some of the things that they're asking about, they're questioning about?
Well, actually, a lot of the time, folks are coming in and asking questions because they have an immediate need, unfortunately. So, excuse me, when someone realizes that they didn't have coverage that they were supposed to have that was required by the state, or a license expires with the state and they need to show proof of insurance again, they aren't getting that service from their current carrier to kind of give them a heads up, either with a policy renewing or when they're coming on as a brand new entity. People typically will not do their due diligence and sit down ahead of time. So a lot of times I'd get a lot of business downtown Vancouver here where people just running in and they're saying, hey, I need to get this today. And so my role is to not only handle that immediately, which I can in each case, but also informing them and, hey, spread the word to your friends, your other contractor buddies, for as an example. We need to have this conversation before today to get you taken care of. So some of the things, that real basic understanding of what you're projecting for the next year is a big thing. So in terms of your salary, your employees' salaries, how many employees you plan on having, these are numbers that even if you don't know them specifically, they don't have to come to an exact fruition, but having an idea, that is where your premiums are coming from in a lot of these policies. And so I would say the number one issue is, have those projections handy. Even if they aren't exact, we can always make changes within the policy to get that premium adjusted appropriately. But that would be the number one thing.
So are you finding people that are coming in sometimes and saying, maybe just throwing out their insurance policies on their desk and say, here's what I have. Hey, can you do better for me? Is this more of many times like a price conscious type thing? People are saying, hey, I need to save some money on premiums. I know I've done that in the past.
Honestly, not on the business side. No.
Okay.
The
so much.
The personal side, yes. But the business side is more of a, hey, I have, 4 or 5 carriers. I'm through with not being able to get a hold of the guy or the gal that to get this taken care of. And so it's really a service issue. A lot of times, I think you guys mentioned it earlier, it's people will say, hey, just give me the coverage I need, and then we need to get that handled today. So you have an immediate need of something issued today, but then there's also this other need of, okay, let's sit down and take some time and look at these gaps of coverage that you may not even know that you have until we take that time.
Erik, see, so that is key, because here's what I see. We see a lot of times that people will come into our doors. Ben and I will see it here in New Hampshire, where people will come in and say, hey, I want to take care of an IRA contribution. But what they're not remembering is there's so many different aspects to their situation. And so as a professional, what you're able to do is you're able to say, hey, well, not only with this aspect that you're concerned about, this urgent area that you want to get taken care of, but you know what? There's some other things that you should really consider, because as a business owner, you have some certain liabilities that could really be exposed if this were to happen or if that were to happen. It's that same kind of thing that you're saying there, I think.
It's huge. And the other side of it, a lot of people don't think about, it's not the saving of the money. And as I mentioned before, it's the being able to recover from the uncovered loss. So if that business and that policy they got from something.com, just to get their license and issued, so they can get out to the job. And then now they have, let's say, an environmental spill on the job site. And, that premium was real low because you don't have that coverage, and now you owe $50,000. So now your business is done, perhaps, if you're new. And if your business isn't done, and you've made some right decisions and had some profits, well, now you're dipping from your investment strategy. And so that's the key, is protecting your investments.
Erik, I love what you said there, because you can go to an 800 number, you can go to a .com company, but if you don't know the right questions, and insurance is a very, very particular area. If you don't know the right questions to ask when it comes to your property casualty insurance, there's some major holes that can be left unfilled. Just like you said there, just a simple thing such as, if there's an environmental spill, what does that mean? Well, all of a sudden that cheap premium that I was paying, you'd certainly want to pay a little bit more to make sure that you're properly covered across the board. And
I should probably jump in and just address the elephant in the room, which is the word casualty. Let me just clarify that with everybody real quick. There's two aspects to this side of the house, this side of the business that I'm taking care of here, and it's property and casualty. And to put it in understandable terms, the casualty side is the liability side. Right. So if you injure someone in a car accident, this is easiest for people to understand because it happens all the time. The casualty side of the policy pays for their medical bills. When you start trying to get coverage for your car because it's damaged, that's the property side. And so ultimately, when people are saying, I'd like full coverage, what you're saying is, I'd like property and casualty insurance.
Right, right.
So,
but Erik, I think those are key areas, because I think about this. I have kids. We all love to ski. Going out there is great to be on the mountain. There's nothing better. Right now, we're kind of getting excited because we're seeing some snowfall around here, and we're kind of gearing up for probably getting some ski days out there. But a liability would be if your kid's going down the mountain and your kid crashes into another kid and hurts that kid, or if your kid gets hurt, you want to make sure that you have proper coverage in there. And so many times I've talked with someone like yourself, and we'll talk about, well, having an umbrella insurance is very important to have in place. But those different things, if you don't know about those things and you don't know to have coverage in place, that can really be a devastating thing for your family. If all of a sudden you have medical bills of $1 million plus, and the base coverage you have is for a couple $100,000, that's not going to cut it when something like that happens.
Yeah, so I have a lot of stories to go along with that too, and it can be devastating.
One of the things that you mentioned is when people say, "Hey, I want to get fully covered," or "I want to get coverage," and using the example of an automobile, you're not legal in the state of Oregon and Washington, at least, to drive unless you do have coverage. And are people typically meaning, yeah, give me the state minimum, but not really realizing, like, okay, that gets you legal to drive on the road, but you're exposed because, the if-then scenario happens, and what that could possibly look like for them, and how to get them understanding. How do people get to the point where they're realizing, oh, insurance is just part, what I have to pay to play, versus, no, it's a really critical part of, creating a safe experience for you to move on through life in case an incident does happen.
Yeah, I think the only way for them to understand is either through stories of real examples, or unfortunately, if they've heard or have experienced that loss.
So share with us, what is that? Share, you said you have a ton of stories. I want to tell me a story, Erik.
Well, it's not a bedtime story, but it is one where a couple who had luckily, this is a good story, actually. Ultimately, they rented an RV in Wyoming, and they unfortunately hit somebody and caused them to be injured and disabled for the rest of their life. So this incident, if they had not had an umbrella policy, would have come against their estate. If they had it, they would have had wages garnished, something of that nature. But
so, what would that look like? Just an example of like would somebody be on the hook for if they're in that scenario and they didn't have that?
Well, I'll tell you, the policy. Luckily, they had an agent that sat down with them, and they had an umbrella policy from years ago. And that umbrella policy was $1 million of liability, what happens there is the company that you're with also defends you in that case. outside of the $1 million umbrella. So they had to fly to Wyoming. I mean, you think about how many trips to be in court. This went to a trial, many trips over a 5-year period where those expenses are covered. They didn't have to come out of pocket initially from them. And then the ultimate judgment in that case, it depends on the person's occupation. If that's a doctor who can no longer operate for 20 years, you can imagine what that price tag could potentially be for that couple. That wasn't the case, but ultimately, it's settled for, I believe it was over $2 million worth of coverage. And so they had $1 million on their umbrella, and then their estate would have had to have absorbed the rest of that. However, with some details within the policy, the company actually even covered above the $1 million. And we're talking about a policy that costs, $150 every year.
Yeah, that's amazing to me when you think about that. No one likes paying money for insurance premiums, but when you think about just the premium on that, not a whole lot for what it can actually cover. So it's so important to have those coverages in place.
Well, when you say something like $1 million umbrella policy, that typically doesn't rationalize to $150 a year. So there might be a fear on the front side of trying to find out how much does it cost to really get coverage in place that's going to, really offer protection. And then, I mean, how many people are driving around today or have been driving around in the past that had no idea, like the story that you're telling, how that's the reality in their minds, thinking I've got insurance, it's covered up to a certain point, and that's what those coverages mean when you're looking at the minimums versus alternatives. So having somebody in your circumstance or in your situation where you can come alongside and really plan through the insurance planning process with people to help them identify what they need moving forward is so amazing.
Well, here's the kicker. Part of that story is about 2.5 years into that 5-year case, that couple had already retired, and their family came into an estate was transferring to them, and they ended up getting quite a bit of money, and so had that umbrella not been there, that would have come directly out of their assets. And the timing of it, because it was all already started, and the details of that I'm not all familiar with the legal side and the attorneys, but they were able to get that covered without it touching that. But think about it. Beforehand, they had the foresight to do the umbrella without any significant assets. Then they received significant assets in the middle of it, and then it was settled completely after that fact. And luckily, they didn't touch the estate in any way. So everybody should get an umbrella policy if you haven't. It's one of Warren Buffett's biggest quotes, as well as when I worked for Geico. I had the opportunity to go to Berkshire Hathaway shareholder meeting and sell umbrella policies for his shareholders, and he had, it was like a banner up there. I can't remember the exact wording, but it was just like, "You're an idiot if you don't have an umbrella policy." Essentially, I'm paraphrasing, but
paraphrasing Warren
you
Buffett.
really need to have one.
Let's streamline Warren Buffett's quotes here. Well, that's, it's funny. There's a lot of detail around this stuff, and I know you're making it sound very simple, Erik. I mean, I know that there's even your general insurance underneath the umbrella needs to have certain limits and certain, you have to have certain deductibles and stuff to even make sure your umbrella, policy coverage is actually, works and is there
There's
for
no
you.
gaps in there. Yeah.
Because sometimes they can just kind of disappear. So there's a lot of different moving parts here, and I think that's why we have Erik here. And I'm really excited about some of the business owners we have where we can't really necessarily provide that expertise, where Erik can really step in here and not only find something that's the very best for somebody, but also affordable, relevant, and appropriate. I think those are the things that are really exciting. So,
yeah, I wanted to ask you about saving money. Is that part of the? I mean, could you? Is that just the frosting on top of the cake, or is that a pretty realistic identity that you would hold out there?
Yeah, in most cases, the ability to save money is there. It's more so on the personal line side. So the auto, home, umbrella bundling, those three are typically bundled together to get a massive discount. In some cases, your discount will more than pay for an umbrella. So even though that 150 doesn't sound like a lot, that can be eaten up completely by the discounts you get on the auto side with a lot of companies. On the business and commercial side, there aren't as many discounts for bundling. However, it's just a matter of, getting those quotes, going with someone you trust. And honestly, I would say about 80% of the time I've been able to find savings on top of better coverage. And people are just like, get out of here. That's impossible. I'm like, no, it is. So wow. you need to have the conversations and check it out.
Yeah.
Well, how nice is it to be able to go ahead and search the entire breadth of insurance carriers out there and being an independent so that you can bring the full spectrum of the insurance world to the table to help them make those decisions.
It's unbelievable. And that's what I'm so excited about. Moving on in my career to the independent side is I'm really working for the client now. I was before, but I truly feel like it's a much deeper level, being able to get quotes across carriers and in all states, in order to find that sweet spot for an industry, or just some savings for personal carriers. It's actually very freeing coming out of the captive side, as the word would imply.
I think that's going to do it for us here at Money on Tap. You guys, this has been fantastic, and what a pleasure to welcome Erik Morton to Brayshaw Financial, taking care of the property and casualty needs of our clients, of you, the listener out there. If you are looking for a way to try to, gather the best information possible and make sure that your coverage is in line and understand what those options are and why, and saving money as well, trying to find new ways maybe to work through a holiday that's upon us, and ways that you can save money, maybe taking a look at and doing a review on your insurance, calling Erik up at 855-226-8551 or emailing at info@yourmoneyontap.com are a couple of ways that you can reach out to us at Brayshaw Financial Group and get a hold of Erik and do some property and casualty and planning on that side of things. So I think that, again, that's going to be a wrap for us today. Again, thank you, podcast subscribers out there. Those of you who haven't experienced us in podcasts, go find us. It's real easy to do. Just look us up. We're Money on Tap, and you can like us. You can follow us there and go back and listen to some past episodes. Bring us your questions. Rate some of the shows that you've experienced out there that you like, or occasionally, I got to admit, there's the possibility that you don't. That's fine too. But we appreciate all the likes and the listens out there as well. You guys have a great week. Thanks a lot.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.